In this video, we're going to show you 15 different types of assets that can produce an income for you. Now, these aren't get-rich-quick schemes or anything like that. But if you're looking for a way to create passive income and build long-term wealth, then you'll want to pay close attention. So let's get started. Welcome to Money Invest. Now that you're here, please subscribe so you never miss out again. And while you're at it, feel free to leave a comment or ask a question. But first, what is an income-producing asset? Simply put, an income-generating asset is an asset you purchase today to get money back in the future. They are, after all, investments. However, it's critical to approach it with a plan in mind. Diversifying is the key to making good profits from income-generating assets. You're undoubtedly familiar with the saying, "Don't put all of your eggs in one basket." It's true, but there's an additional layer to it. Diversification is one of the most essential principles in investing, and for a good reason. By spreading your investments across different asset classes, you reduce your risk of losing money if one investment fails. And with economies becoming increasingly unpredictable, it's more important than ever to have multiple sources of income. Income-producing assets are a great way to achieve this goal. 1. Peer-to-peer lending. One option for generating income that has grown in popularity in recent years is peer-to-peer lending. With this type of lending, individuals serve as a bank to someone looking to borrow money. The borrower pays back the loan with interest, similar to how it works with a traditional bank loan. You might wonder why someone would not simply borrow money from a bank. Sometimes, the borrower has a poor credit score, and banks are unwilling to take on the risk. As the lender, you can choose how much money you want to loan out and what interest rate you want to charge. The average return on investment for peer-to-peer lending is around 6% to 10%, but this can vary depending on the platform you use and the loans you choose. 2. Royalties. If you're not into lending, maybe consider investing in something with a bit more class. If you're looking for a source of relatively stable income that is not entirely influenced by the success or failure of financial markets, then consider investing in royalties. These types of intellectual property can be auctioned off on websites, such as Royalty Exchange, and include items like songs, movies, and logos. It's impossible to predict how popular a given song will be in the future, and thus whether its royalties will increase, stay stable, or decrease. This is just a fact of musical taste. What's currently fashionable may well go out of fashion next year. As an investor in royalty rights, you have to be comfortable with this risk. It comes paired with the potential benefit that your investments might suddenly become very valuable. The dollar age, however, is a metric used by Royalty Exchange to estimate how long anything will remain fashionable. For example, if two identical songs each earned $10,000 in royalties last year, and one was released in 1950 and the other was released in 2021, the song released in 1950 has a longer dollar age and will most likely be a better long-term investment. The 1950 song has over 70 years of demonstrated earnings, while the 2021 only has one. Though the newer song may be a passing fad, classics from 1950 endure. We hope you find this content valuable. If you are, please consider taking just a quick moment to buy us a coffee. The link is in the description and pinned comment immediately below the video. We deeply appreciate your support. 3. Investing in a business. Another way to generate income is by investing in a business. This could be done in a few different ways. For example, you could invest money in a friend or family member's business venture, or you could put money into a business you start yourself. Of course, there's always the option of buying an existing business. This could be a great option if you have the capital to do it, and you find a business that's already doing well. If you're going to invest in a business, it's important to do your due diligence. Make sure you understand the business and the industry it's in. Also, it's a good idea if you invest in an evergreen business. For a full list of ideas, check out our video, Top 10 Businesses That Never Fail. 4. Real estate investment trusts. Consider investing in a real estate investment trust if you're hesitant to make an upfront payment for a property. REITs are companies that own, operate, or finance income-producing real estate. They are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends. That makes them an attractive option for investors looking for regular dividend payments. In addition, REITs tend to be less volatile than stocks, so they can offer a more stable source of income. The average compounded annual return is 10% to 12% for REITs, according to Nareit, an industry trade group. 5. Rental properties. An increasingly popular option for generating income is to invest in rental properties. The appeal of this option is that you can earn money from your investment without having to put in a lot of work. Once you find tenants and get the property up and running, it can provide a steady stream of income with relatively little effort on your part. Of course, there are some drawbacks to this option. For one, it can be difficult to find good tenants. Other factors to consider are hidden costs, which include repairs and maintenance expenses. Many homeowners overlook these costs and are shocked by large charges later, so it's critical to keep them in mind. But if you're willing to do the work, rental properties can be a great way to generate income. The typical annualized return is 12% to 15%, but it can be much better or worse depending on the market circumstances. 6. Farmland. Other than real estate, farmland is another excellent source of money since the dawn of civilization. Farmland is a less correlated asset, meaning it doesn't move in the same direction as other assets such as stocks or bonds. Low correlation is one of the main reasons to invest in farmland today. Unlike equities, farmland has less volatility and inflation protection. Unlike an individual stock or bond, farmland is unlikely to go to zero because of its asymmetric risk profile. However, it's worth noting that climate change may have an impact on this in the future. But how do you invest in farmland? One way is to buy shares of a publicly traded farmland REIT or mutual fund. These funds invest in large tracts of farmland across the U.S. and internationally. Another way is to invest in a farmland partnership. This is a direct investment in a specific piece of farmland. You can also buy farmland directly, but this can be a more complicated and expensive process. The average return for farmland is about 4 to 6%, according to the National Association of Realtors. 7. Money market accounts. A money market account is a type of savings account that usually has a higher interest rate than a traditional savings account. The interest rate is variable, which means it can go up or down over time. While the interest rate on a money market account is typically lower than the interest rate on an investment like a stock or bond, it is still a good way to generate income. Another advantage of a money market account is that it is relatively liquid, which means you can access your money when needed. This is not the case with all investments, such as real estate or certain types of bonds, which can be difficult to sell quickly. 8. Dividend stocks. These are stocks that pay out dividends, which are typically paid quarterly. Many companies use dividend payments to attract and retain investors. One advantage of investing in dividend stocks is that they tend to be less volatile than other types of stocks. This means they are less likely to lose value if the stock market falls. In addition, dividend stocks typically offer a higher yield than other types of stocks. This means you can earn more money from dividends than you would from other investments. The average compounded annual return is 8 to 10%. 9. Bonds. Bonds are another option for generating income. They are debt securities issued by corporations and governments to raise capital. When you invest in a bond, you are lending money to the issuer. In exchange, the issuer agrees to pay you interest payments and to return your principal when the bond matures. The main advantage of bonds is that they are relatively low-risk investments. This means there is less chance that you will lose money than with other types of investments. In addition, bonds typically offer a higher yield than other types of investments, which means you can earn more money from them. The average annual return compound is usually 2% to 4%, but in today's world of low rates, it can be lower. 10. Certificates of deposit. A certificate of deposit, or CD, is a type of savings account that typically has a higher interest rate than a traditional savings account. CDs are FDIC insured, which means they are backed by the full faith and credit of the United States government. When you invest in a CD, you agree to leave your money in the account for a set period of time, typically 6 months to 5 years. In exchange for this, the bank agrees to pay you a fixed interest rate. One advantage of CDs is that they offer a guaranteed return on your investment. This means you know exactly how much money you will earn from your CD and when you will get it. This predictability can be helpful if you are trying to generate income from your investments. 11. Savings accounts. A savings account is a type of bank account that allows you to save money and earn interest on your balance. Savings accounts are relatively safe investments, which means there is little risk that you will lose money. In addition, savings accounts offer a modest return on your investment, which means you can earn some money from your savings. 12. Individual retirement accounts. This is a type of retirement account that allows you to save for retirement and receive tax benefits. There are 2 types of IRAs: traditional IRAs and Roth IRAs. Traditional IRAs offer tax-deferred growth, which means you don't have to pay taxes on your investment gains until you withdraw the money. Roth IRAs offer tax-free growth, which means you never have to pay taxes on your investment gains. One advantage of investing in an IRA is that it can help you save for retirement. Another advantage is that it can provide you with tax benefits. Thank you so much for watching this video. We hope that you enjoyed it. Make sure to subscribe to this channel if you want to support us, and we'll see you in our next video.